Hi, my name is Joseph Eschleman. I'm the president of Towerpoint Wealth. We're a boutique and fully independent wealth management firm located in downtown Sacramento. Right now, we are deep in the whirlwind of tax season, when it is crucial to maintain a meticulous attention to detail and be properly prepared. Here at Towerpoint, we have noticed that our clients tend to ask a number of common questions this time of year about their income taxes. And in this video, we'll be addressing the top 5. So grab your notepad, maybe your CPA as well, and let's dive in. So question 1.
Hi, Towerpoint Wealth team. My question is, should I itemize or take the standard deduction?
Most good CPAs and most good tax software like TurboTax and TaxSlayer will automatically help you make the determination of whether itemizing is more economically beneficial for you or whether taking the standard deduction is. Now, the standard deduction is a cornerstone of tax planning and offers a straightforward approach to reducing taxable income for millions of taxpayers. Now, for those who opt not to itemize their tax deductions, the standard deduction is a preset amount that serves as a valuable tool to simplify the filing process and potentially lower your tax burden. For 2023, the standard deduction is $13,850 for single taxpayers and $27,700 for those married filing jointly. Alternatively, if it is more economically advantageous to do so, you also have the opportunity to itemize your deductions in lieu of taking the standard deduction. Now, this allows you to aggregate and then claim or itemize certain eligible expenses such as mortgage interest, state and local taxes, charitable donations, and medical expenses. Itemizing can potentially result in a lower tax liability, obviously only if the sum of all of your itemized deductions is greater than the standard deduction that's available to you. Itemizing does demand meticulous record keeping and thorough documentation of expenses, which may prove cumbersome for some of us. Ultimately, the decision on whether to take the standard deduction or to itemize hinges on your individual financial circumstances, including the magnitude of your deductible expenses and your overall tax saving potential. Now, here at Towerpoint, we've recognized that some people get upset at losing their itemizations if it is more economically beneficial for them to take the standard deduction. However, we do encourage our clients to not get too bent out of shape if it isn't beneficial for them to itemize, as the standard deduction was recently increased, and the strategy we care about here is whatever results in the most tax savings. Question 2.
My question is, what happens if I miss the April 15th tax deadline for the 2024 tax season?
Now wait, you forgot to pay Uncle Sam and the deadline is come and gone? While you probably won't get hauled away to jail, missing the April 15th tax filing deadline is like sending an invitation for Uncle Sam to do his version of a not-so-friendly knock on the door. Forget the red carpet, it's more like a red flag, waving for potential penalties and interest charges just to come marching in. Now, missing the tax filing deadline can trigger a cascade of consequences that may impact you both financially and administratively. First, failure to file by the deadline typically incurs penalties and interest charges on any unpaid taxes owed. These penalties accrue over time, compounding the financial burden for each day of delay. Additionally, if you miss the deadline, you may face repercussions such as a reduction or loss of refundable tax credits, including the Earned Income Tax Credit or the Child Tax Credit, potentially depriving yourself of valuable tax breaks. Moreover, overlooking the deadline could lead to increased scrutiny from and tarnish your compliance record with tax authorities, inviting audits or inquiries that further exacerbate stress and strain on both your resources and time. And beyond the financial penalties and potential for increased IRS scrutiny, which none of us wants, missing the tax filing deadline can disrupt financial planning and create unnecessary stress. Delays in filing may postpone the receipt of tax refunds, impeding your ability to allocate funds towards essential expenses or overall longer-term goals. So, what should you do to mitigate the repercussions of missing the tax deadline? A, take an extension. Requesting an extension grants 6 more months to file, but does not grant grace regarding your obligation to pay any outstanding taxes by April 15th. So at least estimate and pay as much as you are able by the original deadline to minimize any penalties. And B, properly address the situation by filing your return as soon as possible, and also immediately seek assistance from a tax professional if needed to proactively address any outstanding tax liabilities, mitigate further penalties, and alleviate undue burdens. Question 3.
My question of the Towerpoint Wealth team is, in my 2024 taxes, what filing status should I choose?
There are 5 primary filing statuses, and choosing the right one is akin to selecting the perfect outfit for a party. It's all about finding the one that fits you best. Filing single and married filing jointly are the 2 most common filing statuses, and there is also what is known as head of household, married filing separately, and qualifying surviving spouse. Each filing status comes with its own set of perks and considerations, and ultimately the key to selecting the perfect filing status lies in working with a good tax and financial advisor to assess your unique financial situation, considering factors such as your income, marital status, dependents, and your eligibility for certain tax breaks. Married couples can oftentimes benefit from lower tax rates and higher deductions by filing jointly. Filing separately may be advantageous in specific situations where medical expenses can and should be deducted. Filing as head of household can offer benefits like a higher standard deduction and sometimes lower tax rates. So to sort all this out, again, consult with your tax advisor and note the URL above, which is an interactive tool that the IRS provides to help you choose the best filing status.
Are you a busy investor always on the go? Take the powerful knowledge of Towerpoint Wealth with you wherever you are with our original podcast, A Wealth of Knowledge. Now available on all major streaming platforms, and best of all, it's completely free to download and listen. Now that's an investment worth making. Click the link above and start listening today.
Question 4.
I am currently paying off my student loans. I want to know, can I deduct my student loan interest?
The short answer, usually yes. If you have paid student loan interest, you may be able to deduct it on your federal income tax return if you meet certain criteria. Generally, if you paid interest on a qualified student loan during the tax year, you may be eligible to deduct up to $2,500 of the interest you paid. However, there are income limitations that affect your eligibility for this deduction. So single filers with a modified adjusted gross income, or what's known as MAGI, of $85,000 or less, and married couples filing jointly with a MAGI of $170,000 or less, should be able to claim the full deduction. Now, this deduction gradually phases out for MAGIs between $70,000 and $85,000 for singles, and between $140,000 and $170,000 for married couples filing jointly. Additionally, you must meet other requirements for this tax deduction to apply, such as being legally obligated to pay the interest and not being claimed as a dependent on someone else's tax return. So it is important to note that the student loan interest deduction is available even if you don't actually itemize on your taxes, except if you're married filing separately. 2 final and important points. Number 1, if you received a family loan to help pay your tuition bill, the interest will not be deductible. As always, please be sure to review the IRS guidelines and consult with a tax professional for personalized advice regarding your specific situation. Question 5.
I really want to know,
How do I know my 2023 IRS tax brackets table and tax rate?
To determine your 2023 IRS tax bracket and tax rate, you can refer directly to the IRS website, or you can download the Towerpoint Wealth 2023 Tax Reference Guide from the Financial Guides and Checklists area of our website. There are 7 federal tax brackets for 2023, ranging from 10% all the way up to 37%, based on your filing status and your income. The IRS typically releases updated tax brackets and rates well in advance of the tax filing season, usually towards the end of the preceding year or at the beginning of the tax year. The tax brackets are categorized by filing status, such as single, married filing jointly, married filing separately, or head of household, and they're also based on your taxable income. By reviewing the IRS publications or by using online tax calculators, you can easily locate the applicable tax brackets for your filing status and your income level. And once you've identified your tax bracket, you can then determine your tax rate by locating the corresponding percentage applied to your taxable income within that bracket. Now, importantly, the tax rates are progressive, meaning that different portions of your overall income are taxed at different rates as you move up through the brackets, and the highest tax rate that you qualify for does not apply to all of your income. Familiarizing yourself with the IRS tax brackets table and tax rates should help to empower you to estimate your tax liability accurately, plan your finances effectively, and make informed decisions regarding tax saving strategies. Remember to stay updated on any changes to the tax code, and as always, consult with a tax professional for personalized advice tailored to your individual circumstances. There you have it, the top 5 tax season questions answered. We hope that you feel better equipped to tackle this year's tax season with confidence and clarity. And remember, knowledge and having a good CPA are your greatest allies when it comes to income tax minimization and reduction. Did you enjoy this video? If so, please give us that coveted thumbs up on YouTube, and don't forget to subscribe to the Towerpoint Wealth YouTube channel, as we regularly add timely, relevant, and expert educational content about taxes, investing, estate planning, real estate, and a myriad of other wealth management issues. Thank you for watching.